Hello friends, welcome back. Today we are discussing few things here to assist the developers of their trade plan, what they can do. So the first part of your trade plan is to find out what the trend is based on several definitions of the trend. What is a trend? A trend for a given time frame may just be a noise on the higher time frame. That is why we do positional trading. Find the best locations where the hedging flows, algo flows will get initiated. What we like to do also at certain times to deal with what we call as bid and ask analysis, because bids are getting lifted up, which means the buyers are aggressively hitting the ask, going and grabbing the contracts which are posted on the sell side, and they just keep hitting those asks aggressively, and that is lifting the price up. We call that lifting the bid, and vice versa. So once you have this bid and ask based momentum identified, you can also use that to define the trends and define the pullbacks using this bid ask being used as a trend. So here on the right side, this is the accumulation of bid and ask, and we have our sophisticated bands here, and this is your actual price. And this is a histogram of the bid and the ask side. Are they showing momentum on the buy side or the sell side? And we added a moving average, Hull moving average, because the fundamental of the chaos, or we should call it a rate of change, is pretty straightforward. Rate of change is approximately square root of pi. Imagine that. If you solve the equations for the financial, this is one of the key results. And also e raised to power minus x squared by 2. And also dx can be square root of time. All right. So the moment is known, the times are known, rate of change is known, and what we do is we define the trends. Everybody has their own approach to trend definitions. We like to do ask and bid. Everything we do based on simple flows, buyers and sellers. That's all there is. It goes pretty deep. But here is that demonstration that here, visually speaking, when I am below this mid bands, the trend is down. And there it is. Come back to retest it. Trend is retested and down again. Here also, trend came back to retest it in the midline, which just happened just now, just today, right here. So that's one approach. Other approach is what we have on the bottom is a Tesla homegrown oscillator. That's what we do as quants, which is basically looking at the Tesla frequency, the bottommost. This is RSI, two RSIs coming together. Why RSIs? Relative strength. It is not oscillator to measure overbought oversold. It is a relative strength measurement. The bottom is actually the rotation frequency, all right, using Tesla mathematics. So this is what you are looking at on the right side. And then we have a typical divergence between the price and the bid and ask, and then also reverse divergence. And there are a lot of rules here, straightforward rules. So you can apply all the technical analysis on this cumulative bid and ask bias. All right, so that is approach, and it is above this you take longs only, right? This is longs only, longs only, longs only, longs only. Then you shift to short, 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 shorts only. Let's go back a little bit if we can. Right? So we're looking for shorts only here. Short, pull back, short. Right? Different approach to trading. This one did not do anything. And then now this one is trying to go. Now what does this mean? Remember, I think long back in one of the videos we discussed when the tool set here, it could be any of the oscillator or it could be bid and ask. If that tool set is trying to show a bias and the price is not following, you can just see it, right? Sellers are attempting to go down, but buyers are taking up all the inventory. So sellers are not able to push the market down. They ended up stopping the upward movement, but the moment is going sideways. Sellers are trying to push it down. So what's going on? This is a hidden reverse divergence. When this takes off, on the other side, it's going to take off. Right there. See that? Huge move. And we obviously have our frequencies to see the edges also. Right here, we posted that on the chart. When market just came down here, we posted this. Right? Went to this frequency. Went up huge. So we're dealing with those frequencies for a reason, because we want to trade large lots. And we trade large lots only at the edges. So if people are having difficulty finding the direction and the trend, this is one approach to deal with this. And it is measuring the rate of change of contracts using this bid and ask analysis. So each bar has 2,900 contracts. We are still dealing with outside world of contracts, high level bar based information. We're not looking inside the bar. And here we can just do, as I said, all the technical analysis you can apply on this synthetic representation of price, right? So it is going here, going there. So you're looking at charts only. All right. So once you see the trend is moving on in the specified direction, what we can do is then look into the oscillators to join the direction. So look at this location where the one Tesla is on the short side and this RSI is on the other side, totally opposite. Here they both are lined up. Here they're lined up. So that's the logic we are trying to go after. always use Apex everywhere, right? Apex is the key, simplest way to get out of your bad trading streak or ideas or confusion. Apex the energy and go where it goes. You can do that on price. You can also do that on the bid and ask representation of the traders. Once you have that, now just need to wait for the pullbacks, right? So pullbacks. So use this as a pullback towards the trend. That means sell all rallies, short all rallies, short all rallies. Just look on the right side, right? Sorry, on the left side. So this is also giving us the bias. Then when we have this level plotted, go above and go below, you can add a bias meter, the way I'm explaining, or some other means. So you can just focus on one-sided trading. You discussed that several times, right? So if you make up your mind, I'll go short only here, right? Because of what we just coming out of the apex is moving down, I will take shorts only until proven otherwise. So when the trend is changing on the edges, you have 1 or 2 losses, but you'll have your wins 3x. Let's say you take 10 trades in one direction, long 10 trades, short 10 trades, right? As the momentum shifts, the structures are shifting. Let's say you win 8 times and you lose 2 times, but your winners are 3x your risk. That's the accuracy we offer. That's the way it should be done, right? If you want to really make a lot of money and sustain your business long term. So this is, again, there are so many ways to do this. This is simpler chart representation. You can do it through simple second tier order flows, right? You can just look at buyers and sellers in control, and the tick chart versus your inside bar trading charts, timestamp flowing, accumulating the timestamps, right, on the flow. Ultimately, all this is trying to tell you a simple formula, simple logic, who is in control at the time of you taking the trade. And if you know the sellers are in control and you have done all the analysis, all the homework, and we are expecting a reversal, now you are in a very profound shape. And that's what this is. So now, if you look at this area right here, short is enabled. This area is not ready on the oscillator. This one is. See that right here. Just look at this Tesla on the right side. Short here, goes back again, short again, right? Why are we doing short only? Because we have changed our bias to take shorts only. And this one is good. Now you see this divergence going on between these two oscillators. Those are very good one too, right here. Look at this oscillator on the blue, double top. Look at the RSI, loss of momentum. Look at the price, rallying. Where? In the blue box. You have to keep tracking all the blue boxes right there, right? I'm here. I'm looking for evidence. Shall I go short or not, right? This is a very powerful way to really get your bearings right on what's going on. Same thing here. Look at this RSI 2 tops and look at this guy. Double top on the Tesla, RSI huge divergence. There we go. And then you're obviously looking at your frequency bars and have we met those target areas of frequency bars, which we did. And we plotted this and we plotted that. This is already plotted for days and days and days. Even a blind man like me can see it. So that is how it is. Unfortunately, you have to build a holistic view of the ecosystem. But nothing is done using any indicators. That is for people who want to chase ghost for decades and still not find the ghost they are after. So this again, third touches are good. First, second, third touch is good, right? So that's how it is. So do the technical analysis. Now this is the chart where you can do any analysis you want, and I think your channels, your trend lines, your shapes, your patterns, they work very well on this. Remember, we are looking at the same data but differently. See, one touch, second touch, third touch, bottom was put on third touch. Look at the oscillator. Everything is screaming is ready to go long. And if you look at this delta bar of bid and ask, it was also saying, hey, this is probably exhaustion. So everything lined up here, but it started with the first, second, third touch locations, right? Got that. And then where did it go? Middle of the band. So we have one touch, the big one coming in, one touch, second touch, third touch, precisely here. I hope that makes sense. If market is going to come down, we already know that from if this top is in, we only know the top is in if the prior low pivot is broken, and that's how it is, and the top is not broken, right? So there are pivot inside pivots. So I only know this is a top pivot when the prior bottom pivot breaks. And this may come back and test it, but it did not break it, right? So it came to test it. So here, this is a high. Look at the previous bottom. You can put zigzag and see if that, in the context of this 30-minute time frame, the different time frames from that same reason. So this is a pivot, bottom, top. This pivot was broken here. Because this was broken here, we know the pivot top is in. And then we'll come back to retest it. Now, these are all fundamental technical analysis. Before you attempt to get into the professional hedge fund program, you need to know all this basic stuff. All right, there we go. So third touch is our interest. And also, you can do the apex, right? Force the apex. Now there's also bull flags going, downtrend is there, all the rallies, let it break, let it come down, break it, right? Come down. So break of this now is here. So at this point, it's gonna go long or short. It's doing sideways action. It is assuming, it's giving you an impression that, hey, this was a big buy run, bull run, came back to 50%, right? And let's go long. But you look at on the right side, this will tell you where are they attempting to take the market as a holistic data set. Look at that. The apex is broken to the downside. Look at the oscillator, right? So this one gave you the hint. We're heading down. And these are the visual realizations of. Now look at this this guy, right? I'm looking for some erratic divergence between these two oscillators. Okay, green made higher high, this made higher high, but look at this guy. Tesla is saying it's not great. There's no momentum. We look at two different versions of divergence of momentum with price. Let me put it politely that way. And we got that, right? And here everything comes together on the other side. And the bottom level, again, it was not this guy getting to the bottom, but if you understand what I'm trying to say, one touch, second touch, third touch is pretty strong on the cumulative delta. And this is what we're looking for. Double top, double bottom works as well. This is one touch, second touch, right? Will it work? Yeah, it will. Because the problem is, we have ways to take one single point and draw the trend lines. You don't have that technology, right? We do. We can simply pinpoint any of the pivot and then we know where the trend is going. Just one single point. All the work we do is just 1 point, 2 points. Automation, just drop it and it. But there's a lot of science behind it, right? Not just like that. So we always need to do some retest. Find some way to retest. This retest is there. But why it is here? Because I'm joining all the bottom. This one retest comes, look at the oscillators. They're saying, okay, there's a potential for you to get some reversal. So that means we are here in this blue box at this point in time. We should have some level of confidence. I'll put a buy limit here. If it keeps going, our analysis is wrong. The way it was that they're trying to push it down, the market is going sideways. That means when this guy turns over and gets a bullish retest somewhere, it's gonna blow on the other side. When the oscillators are moving down, price is moving sideways. When these oscillators turn the other way around, they will blast off. This is like a reverse compression. All right. Always apex. So look at the tops and bottoms, right? So I think it just adds another dimension to the analysis. We already covered that one. Okay. So retest short is coming here. And look at the two oscillators, they are all ready to go, and it's telling me big bar came, retest on the middle band, go down. And it does. 40 points, right? Doesn't matter. Points are not the issue. It's finding double bottom is right there, right? First one, second one held V shape, right? This is one of those V shape patterns which are very strong. As we discussed earlier, compressed energy is volatile energy. First touch, second touch, third touch, also double bottom and compressed V shape, and look at the oscillator condition, high probability going long. So here, same thing. If it goes down, just put on the top buy order. It'll take you in. And there's not a single, it just got you in. I'm not going to talk about trade management or how to enter all these things. I'm giving you ideas where you can make substantial amount of return on capital. All right, so this is one of the failures, right? In this market is closed here and it opened here, right? So now this is a failure. See that? Everything was lined up to go short in the middle of the band. This is ready to go down. This is ready to go down. Nothing happened. Now the sellers, now this is what example is. This is again a challenge with this guy, right? Our bias is saying to go short only. Based on the who is in control of the bid or the ask side. Ask is hitting the bids. They're hitting the bids and they're lowering. What are they doing? They're getting aggressive. Sellers are aggressively going and hitting the bid side, moving the market down. So in this whole action, started here, goes to the same thing we talked about. Market made sideways scenarios all along when this was attempting to pull the market down, and they were not able to. So what does that mean? Once we get enough accumulation and we hit the third touch, we are going to blast. One touch, second touch, third touch. You can also do the apex here, right? So market is always giving you some information on success and failure, what's really going on. So any attempt to use this as a tool, buy and sell blindly, doesn't work. Any tool, same thing. But they're not even tools. They are just raw. We're dealing with raw price action only, nothing. Apex. You can just, so when this is happening, we need to find a better way to take shots. And if shots are not working, as depicted by this, what we do, right? We wait by drawing technical analysis. So this is a trend line we found. So this started the downtrend somewhere here. But this information is not ready. So what do we do? Let's open this one. Same thing, right? This moving average did not catch up either, right? So this, now I have to pull more data out, and then this is a continuous scenarios. But if I have to take a shot in this zone, so this should be some shorting opportunity, which means below the blue line you take a shot. Now it didn't go all the way 100 points, but location and the bias was correct. Let's go to the next one. Here everything is lining up to go on the short side too, right? Somewhere here, if you're going short in the blue, this was a failure. This one was good, but remember, I'm looking for shorts only. This one was a failure. This one, it came to the good area, short somewhere here, right? Because the trend is down, and this is helping us to push it down right there. Goes back up again. And then we also have a long one touch, second touch, third touch, this is fourth touch, this is fifth touch. So now this is where the buyers are they're looking at it, right? So here it's a long too. You put a buy stop there. One time loss, second time take off, right? So if you are losing 5 points to make 30, right? So 5x is good. Same thing here. So it is almost like a channeling, expanding channel. One touch, second touch, third touch, short. This one is also a short, did not work. This is a long, which worked out nicely. This is going to be a short coming up. So this is how I think is a better approach to take the trends also defined by the virtue of buyers and sellers. Now this band is on the top side. Market has gone there. Our job is to look for the pullback to go long in this area. How do we do that? I'm discussing bid and ask. Forget about everything else. Just bid and ask. First of all, always draw trend lines in this bid and ask. Third touch came here. One touch. Second touch. You can do zigzag also if you can't see it. Third touch. It is above the band, coming to retest it. There we go. Third touch. Look at the oscillators, right to go long. So we got long. So this is how it is. First touch, second touch, third touch. What are we expecting? We're expecting market to go down. So hopefully you can see that. One touch, two touch, three touches here, Third touch is working out for last 8 years. It's continued to work forever. This is everything we're doing is raw data, right? First touch, second touch, and third touch. Third touch, oscillators, ready to go short. So when I say ready to go short, means you don't readily just jump into it. Then you come into the execution chart. So now this is on the 4 hour. This could be just maybe one big bar. On a daily, could be just one big bar, right? So inside that, we're doing double top. Inside the bigger time frame, we're doing a double top in a lower time frame. But the idea was to go short here based on the analysis. It gapped open. Then we're looking for a short and another short. Apex. Again, short is there. This is a pullback actually. See that? Short, pull back to mid band. Pull back to another big band. Pull back again here. And this is something we already discussed. It went sideways, right? It is not going down. Everything is trying to pull it down. Market is going sideways. What does that mean? The moment these guys turn over, it's gonna blast on the other side, right? You saw that. So this is just again, we have a lot more deeper technical analysis tools, but if you want to have some visual inspection of the buyers and sellers, you can do that way. Then we also have what we call as divergence between the price itself and the bid and ask, just like any other tool. So here we made lower low. This did not follow through. So what does that tell me? We're comparing this pivot with this pivot, right? Here it made a little slight higher high. And let me remove this. What happened here on the bid ask? It made lower low. So when you want to compare the pivots, this is how you compare pivots. The bid ask flow with the price flow, and then comparing the pivots, how the pivots are getting constructed and retested. The buyer seller view versus the price view. So if you just look at this price, you're doing a double top or a triple top almost. Well, this is a 40-point move down, but look at the price and look at the bid and ask. This is a triple top, double top, triple top, right? So depends on where you're measuring from. So let's say this is triple top. But look at the pivot here versus here versus here. It tells us that when this pivot was retested by the buyers did not have the right strength. At this point. So I can trust it to go and to hold this top. Let's do the same analysis on the bottom. When we're doing a double, this is accumulation distribution, we don't know. This could be a reversal zone, or it could be a 50% zone to go to the next level. We know using other methods, and I'm just saying that this could be, this is 50% move. This balance point could be just a 50%, and it's trying to go double the height from here to here. That's why we use frequency bars too, right? But you got the idea what I'm trying to say. But if you look at the bid and ask of the buyers and sellers, and you can just see it here. Third touch, it is showing the sellers are trying to push it down. The third touch has arrived, and also the price pivot is jumping between the pivot. It is holding. It is holding. It should have been here, but it is not. If you look at this price and this pivot, it is here and here. If price is really following the sellers, it should have been sitting here. It is not. It is being held. And when this apex breaks, you can just see it takes off, right? This is how we can identify the consolidation zones. Which direction are they going to break? I think I'll be covering a lot of things here, but the fundamental thing is understanding. If you look at this delta chart, the moving average is above the most of the deltas, and you can see there are more green bars on the top than the red bars. There's a buyers and sellers in every bar, but who's more aggressive is the key. Are we hitting the bid or hitting the ask, and which side is getting lifted up? So if this is a zero line, all along there's a hidden agenda. The buyers were in control. This is a little bit difficult to see, but you're just looking inside the bars, which bar took control of the situation, things like that. That's all there is. So again, analyzing the buyers and sellers, how they are defining their footprint compared to price. So here, V-shaped double top, head and shoulder is all there, right? Okay, we got a shoulder, head and shoulder, fine. But look at this on the top. Buyers are not able to penetrate this, and we are generating an apex. Whichever side apex breaks, most likely it is going to go in that direction, which in our case, doing a pure technical analysis, we have apex. And the oscillator, at least this guy is saying it's going to go short. They don't see that they also get out of sync. When they all sync up together, this is where the magic happens as well, right? So, all right. So you can get a hint also from RSI, little bit hint where they're going to break the apex. We can also take a hint of understanding how the buyers and sellers are behaving when we are retesting the pivots. So how about this guy? We already had this frequency plotted. Short is already anticipated. Let me remove all these lines, and let's call it a day after this analysis is done. Okay, look at the behavior. Same thing, right? Same thing we saw. Sellers are trying to, buyers are trying to cut it, sellers are trying to push it, and this is the reason it becomes the consolidation area. And what we do is, when this happens, apex it out. Easiest way to apex it out. Where it goes, you go. So if you look at this, what's happening? Sellers are, there's a drift of sellers in this apex zone. It is telling us it's most likely gonna go to the short side. There's a drift, third touch, break on this, go. Right, so this is kind of analysis we need to do at the frequency edges. Here is your famous support becomes resistance. So here the sellers came down, so does the price. So they were able to control the price and they put it down. Something stopped it here. And we just covered it. What stopped it? The trend lines. Right? So at this moment, let's put the apex also here, right? Closely following the price. So at this moment, you're looking at this price coming down to the pivot. If this pivot holds, and which put the top, this buyers got in control here, they put the pivot here. Seller, if the stop is only confirmed if the pivot is broken, which created this movement up. This is here. Unless this is broken, right? We don't say this is a top yet, but we have other ways of doing it, which is frequency, which we already tested that, and we already see it was already plotted days back, right? And it happened. There's also quarter point banking bars. A lot of things happening here. We don't know. Only people who are in the hedging program, they know. All right, but you got the idea. Now if you look at the bias from this side, okay, it shows, okay, this is support becomes resistance, apex is coming, it's already happening. I'm gonna take logical understanding that whichever direction it breaks, I'm gonna go with this. Now the frequency already picked it up way earlier than this, right? So here, this guy picked it up a little bit. We can make this much faster too, right? But I'm just giving you the ideas and concepts, how you want to look at the buyers versus sellers in this flow, and how price is reacting, and how the pivots are being shaped and reshaped. By the virtue of the prior pivot, are they expanding pivots? Are they compressing pivot? Like compressing pivots, like shorter and shorter, creating a triangular compression. So are the pivots creating this shape, expansion shape, or they're creating apex shape? And how the prior pivots are holding compared to the pivot which created the move up or down. So these are the critical pivots right there. Once they break, if they break this guy, we know top is in. If they don't break this guy, we know this guy, this buyer is still in control and he's holding it right now. So that means he's going to blow off the top. That's all there is, right? And let's practice in a little bit of fun. So this is a proper approach to understanding the trends and entering the trends, retest failures, doing it on the bid ask charts, and then we obviously have our ways of doing much more. Thank you very much.